Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SAFEHOLD INC quarterly report. SAFEHOLD Inc. provides various businesses and services that cater to the needs of property owners. Some of these include ground lease industry solutions for multifamily properties, high returns with reduced risk for office buildings, income generation and long-term capital appreciation for industrial properties, value unlocking for hospitality, student housing, life science, and mixed-use properties through its ground lease model. Tax-efficient services as a real estate investment trust, REIT. SAFEHOLD Inc.'s stock price drop, a complex mix of factors in the past year. SAFEHOLD Inc. SAFE has experienced a significant decline in its stock price, falling by 36.83% according to Trading Economics. This drop is attributed to a combination of factors affecting the ground lease business and broader real estate sector challenges. Key contributors to this decline include shifting market expectations for the ground lease sector, increased competition from new players, and elevated long-term interest rates that have impacted new originations. Additionally, analyst price target reductions, such as RBC Capital's lowering of its price target from $20 to $17, have also influenced investor sentiment. Despite reporting strong third-quarter 2025 earnings, surpassing analysts' expectations, the stock still saw a decline in after-hours trading. This suggests that market concerns and future outlook weighed more heavily on the stock price than the quarterly results. As a result, investors remain cautious about SAFEHOLD's prospects, contributing to its significant stock price drop over the past year. The primary drivers of revenue growth or decline can be identified from the financial summary provided. Revenue growth is primarily driven by interest income from sales-type leases, operating lease income, and net investment in sales-type leases. The increase in ground lease receivables and equity investments also contributed to revenue growth. On the other hand, revenue decline was mainly due to a decrease in other income. Mixed or neutral impact on revenue growth came from management fees from Star Holdings, registration rights agreement with potential revenue, and acquisition of ground leases for an aggregate purchase price of $170.4 million. Net income and profit margins experience growth. The financial performance of a company has shown significant improvement over the past year. Net income has experienced substantial growth, increasing by 51% from Q3 2024 to Q3 2025, and by 9% from YTD 2024 to YTD 2025. The net income also increased by $6,160,000, or 7.7% from 2024 to 2025. Profit margins have also seen an upward trend, with a notable increase in the net income margin from 21.7% in Q3 2024 to 30.6% in Q3 2025. The improvement in profit margins can be attributed to the rise in net income and a decrease in costs and expenses. The growth in both net income and profit margins is a positive indicator of the company's financial health, suggesting that it has been able to effectively manage its operations and increase revenue. The company's financial performance indicates a consistent generation of positive operating cash flow. This can be seen in the multiple instances where operating cash flow is reported as positive, including on pages 2, 14, 24, 45, and 56. Additionally, page 61 shows that cash flows provided by operating activities for the year 2025 were a significant $35,495,000. This trend suggests that the company's operations are generating sufficient funds to cover its expenses, resulting in positive operating cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. The debt level has increased substantially, with a net increase of $197 million from December 31, 2024 to September 30, 2025. This is attributed to increased indebtedness to fund acquisition activity, which has led to an overall rise in total debt obligations from $4,317 million to $4,514 million. Interest expenses have also seen a notable increase, rising by $2.536 million, or plus 5.1%, for the 3 months ended September 30, 2025. This trend continues over the 9-month period, with an increase of $6.489 million, plus 4.4%. The interest expense has risen from $49.961 million to $52.497 million, and from $147.7 million to to $154.2 million for the respective periods. These changes indicate a significant shift in the company's financial landscape, with increased debt levels and corresponding higher interest expenses. Management is optimistic about the company's outlook and strategy. They believe that owning a portfolio of ground leases provides investors with safe and growing income through long-term leases with contractual rent increases. The company expects to drive growth through capital appreciation from land value appreciation and potential acquisition of commercial buildings at lease end. The management also emphasizes the diversification of their portfolio by geographic location, property type, and sponsor to reduce risk and enhance upside. They target investments where the initial cost of the ground lease represents 30–45% of the combined property value. In terms of market opportunity, management sees a significant market for a dedicated provider of ground lease capital, which they intend to capture through multiple sourcing and origination channels. The company also expects to make quarterly cash distributions to shareholders sufficient to meet REIT qualification requirements and has a strong credit profile that facilitates access to efficiently priced capital. Overall, the company's strategy is focused on providing safe and growing income opportunities for investors while capturing market opportunities in the ground lease space. Acquisitions and divestitures overview the company's financial activities have been marked by a few notable transactions. On the acquisition side, there are no recorded deals within certain specified pages of the document. However, on the divestiture side, two significant events stand out. Firstly, in March 2023, the company underwent a merger with iStar Inc., marking a substantial transaction. Secondly, in February 2022, it sold 137,142 carat units to third-party investors. These transactions demonstrate the company's strategic efforts to restructure its operations and optimize its financial position. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In recent years, it has paid dividends in the amounts of $38,231 in 2025 and $37,947 in 2024. Additionally, the company has authorized the repurchase of up to $50 million of common stock, demonstrating a commitment to buying back shares and enhancing shareholder value. That concludes the financial summary for SAFEHOLD INC. Feel free to comment below, and I will be happy to answer them when possible.